Hello friends, this is Dr. Amarjeet Kaur, Professor of Accounting and Business Communication at the Department of Management, Gurugram University, Gurugram. I am author of 62 research paper and have either authored or edited 11 books, and I carry about 30 plus years of experience into teaching and food industry. This is my privilege that I am here with you to talk on accounting. I am going to talk about the basics of accounting, the introductory part of accounting today. So, the topic is introduction to accounting. We are going to talk about certain jargons which we use in accounting term for next few minutes, and thereafter we will be talking about objectives of accounting, users of accounting. So, primarily this is a basic introductory session on accounting. So, friends, we all understand that the business activities are the ones which leads to many allied activities into it, or maybe you may call it this way, that because we are running business, because we have business or organizations there, so there are so many functional actions or functional activities which are carried by any organization or by any business. So, to understand accounting, it is very important, it is rather imperative to know what economic activities are, and then thereafter I will try to help you understand the link between the business and accounting. So, business is primarily the economic activity anybody takes for the purpose of making money or making profits, but that activity should be on perpetual basis. It cannot be one time activity. For example, if I go to a market and I buy a dress for 2000 bucks here, and I come back and to my home, and my friend asks, wow, this is a beautiful dress, how much did you pay for? So I if I tell her that I paid 2000 rupees for it, but she liked it so much so that she is keen to buy the same dress for 3000 rupees, because the same day she has to go to attend some party, right? So I agreed to sell that for 3000 rupees. So I made a profit of 1000 on that dress which I bought for 2000, right? So I am ignoring the transportation cost, etc., etc., So my total cost was 2000. Now can we take it as a business activity or economic activity? It was an economic activity, but it was not business, because I am a professor of accounting and I bought that dress for personal use. I do not intend to sell, I do not intend to make money on that. It just happened that I ended up selling it for for a margin of 1000 rupees. So, since it is not carried as a perpetual activity by me, buying and selling of dress is not a perpetual activity, it is not my profession actually. So, it means that was not an example of business. So, any activity, economic activity, to qualify it as a business, it should be on constant basis, it should be undertaken as a perpetual activity, and intention should be to make money. Only so economic activities which are carried for the purpose of making money and are carried on continuous basis are taken as business. This is what the business is. Now businesses have so many transactions every day. Had it been a small business, had it been a business of very high value, the number of transactions could be limited to 5, 10, 20, 100 maybe, and a person can remember, recall those transactions on tips, right? But what about the businesses which have are having transactions in thousands and thousands every day, right? There are thousands and thousands of transactions, maybe lakhs and lakhs of transactions in a day. So in that case, if I want to see that how am I doing in my business, I need to record certain numbers, certain the value of those transactions which I am doing in my business to know am I doing well in my business or not, right? So for that purpose we have a branch of accounting which we call as financial accounting, which comes in to help us record business transactions for the purpose of knowing either I am earning profit or I am losing money, and what is the position of my assets, liabilities, etc., etc., on particular day. So that is why the business transactions comes into business transactions are recorded and the accounting comes into picture. To understand accounting or to talk about what accounting is, before that I want to talk about few jargons which we use. So I just explained what business is. Now I am going to explain certain more terms in the accounting which we use. Number one is business, which we discussed. Number two is transactions. Now what is transaction? Transaction is exchange of any good or service between two people, more than two people, or two organizations. So that's what transaction is. So if I am giving you my dress, which you want to borrow to wear on in a party in the evening, so that is a transaction. Of course, there is an exchange of, I have given you dress, then you are maybe you are giving me a thank you note, maybe you are giving me some chocolate, a box of chocolate, some kind of so exchange has happened. But to qualify this as a transaction, we have to see that transaction is a business transaction. It means there is a difference between transaction and a business transaction. So transaction is just an exchange. I gave you 100 rupees note and to get two notes of 50 rupees each. That was also a transaction, right? So that was just I want two 50s, 2 rupees or 2 notes of 50 rupees each, and you accepted my 100 rupees note, one note, and you gave me 2 notes of 50 rupees each. So that was a transaction, but that is not a business transaction, right? Because business transaction needed to be carried with the purpose of making money. It is the activity which is carried on regular basis, and it is affecting the economy. It is making some impact on the economy, right? So some kind of sale, purchase of product or service, some services rendered, some products are sold. So business transaction is a transaction which is carried by a business on perpetual basis to make money, and it has a supporting document, and it can be measured in monetary terms, right? So I may give you my suit, in exchange you gave me your dress, we wore each other's dress and returned it. So it has no monetary value, right? So it is not a business transaction. To qualify a transaction as business transaction, it must be measurable in any monetary unit, be it dollar, be it rupees, be it taka, be it any currency, right? And then transaction should be carried on regular basis, and intention to carry that transaction is to make money. So this was the business transaction. The next term I want to talk about is assets. Now what are assets for a business? Because I am going to use all these terms in my future sessions, and especially when we discuss accounting. So assets are possessions by any business, which are anything which business possesses and which has been held in the purpose of either using it in future or selling it in future. So assets are possessions. So business has ownership on it, or business has possession on it, and business is, why is it holding? A business is holding that particular item or product, or any item, because it wants to use that item, that substance, right, which I am talking as an asset. It could be a non-substantial as well, it could be a copyright, it could be a patent as well, which has been procured, bought or generated with the purpose of using it in the business, or which helps us generate the business, generates a revenue. So, if I am using it for the production, for example, the raw material is one example. So, I am holding inventory of XYZ product, which is raw material to my main product. So, why I am holding it? I am holding it because I want to use it in production. So, just one example. I may be holding the finished inventory, finished goods inventory, right. A car manufacturing company may have spare parts, may have a steering, wheels in its stock. So, why are they held? Because the company wants to use it in production. So, that was raw material, but there could be many units of cars which are handy, which are ready to be sold. So, why company is holding it? It is also an asset. So, company is holding it because it intend to sell it in future, maybe next minute even that is an example of asset. Company may have some legal rights, copyright, patent, even that is asset, because it is helping us to generate revenue. Company may have machinery, plant, furniture, fixtures, etc., etc. So, what they are? Even they are assets, because so they are long term assets, they are fixed assets, we call them as PPE, property, plant, equipment. Why do we call them assets? Because they are helping us generate revenue. With the help of those furniture, with the help of those machinery, those plants which I am referring here, the company is generating products, company is delivering services, right. So, I am producing products or I am rendering service with the help of those assets, which is basically the long term assets in this example. So, in all, I have taken example of raw material, I have taken example of finished goods, I have taken an example of copyright, patents, I have taken example of long term assets which we call as PP. We may have assets which are under construction, even a building under construction, a copyright under construction, a product prototype under construction, right. So, assets, that is how we divide types of assets. But in a simple and the most simplest form of asset is the possessions which company has, which are going to be used in future for generating revenue. Okay. So, then we have liabilities. What are liabilities? So, assets are possession, and so it means what we own as a business, and liabilities are what we owe as a business. We may owe to another business, we may owe to employees, we may owe to suppliers, we may owe to government, we may owe to any government body, right, or any national, international body for that matter, or to customers even. So, liabilities are the responsibilities, the obligations business has towards others other than owners, right. So, any obligation of a business other than owners is taken as liabilities. For example, if a business has procured raw material from other company named Y, and I am and the business is X company procured raw material from Y company, and X company did not pay for that raw material to Y company when it bought it a month ago. So, it is a liability. Even after a month, 1 month, the material may have been used in production, but since I bought some service, I bought some products here and I did not pay, it becomes my obligation, and that obligation is liability. One example. Employees have worked for me as a business, and and I am supposed to pay them salaries. If I have not paid them salary even on 30th of the previous month, and even 7 days has passed away of the next month. So, on 7th of the next month, the new month, I have yet to pay salaries. It is my obligation because my employees have rendered services for me, right. somebody has given me some money in advance. So Z company has given 10,000 rupees to Y company in advance to get some products in future or to get some service in future, and the Z company is yet to deliver that product or service in future, right. So, but the advance has been received. So, what is that advance? The advance of 10,000 in the books of Z company is a liability, is an obligation against which the company has or company is obliged to render service or provide products for the same value. So, these all are examples of liability. Another example could be the tax demand. Income tax authorities, they expect you to pay on every, for example, every quarter. So, after 2 quarters, the business could not pay that the advance tax installment. So, that becomes an obligation, because it is a legal obligation to pay advance tax on a particular date, which a business failed, and it is going to be shown as liabilities in the books of the business. These were the small examples on recurring nature, but the business may take loan from a bank, business may take loan from debenture holders, even they are liabilities. So, the bank loan, debentures receive, the amount received against debenture, even they are examples of liabilities. Now, the next term is equity. What is equity? Equity is basically, people may call it as capital as well. It is the obligation of business towards owners, towards promoters, towards owner. On equity means the right in the equity share capital. So, equity denotes the right. So, right of a shareholder in the total capital, total equity of the business, and whatever a business has received from shareholders, from owner, is an obligation to be paid in future, at the time of winding up, if it is an regular equity. If it is a preference share capital, then it is a different story, but it is an investment by shareholders and obligation of business. So, it is a liability of the business to owners, whereas liabilities per se, which the word which we use is obligation towards outsider, and equity is the obligation of a business towards owners. So, that is what it is. So, let me talk another terms, for example, dividend. So, what is dividend? So, dividend is basically the undistributed amount of profit. So, if business retains certain amount, and does not distribute to owners, that so if the profits are, let us say for example 10 lakhs, and out of that the business decided to pay 5 lakhs as dividend, as profits to be shared with owners, and to retain the remaining 5 lakhs. So, dividend would be 5 lakhs, and the 5 lakhs would be taken as retained earnings. So, dividend is the amount of profit which is paid, and the profit minus the dividend which we have paid, the amount out of profits, the remainder is my retained earning, right. So, retentions, retained earnings. So, dividend belongs to owner. So, basically all amount of profit whatever a business earns is the amount which belongs to shareholders, equity holders, or the preferential holders. So, dividend actually is nothing but the shareholders' return on their investment. So, whatever they have invested in a business, if company retains certain part, that becomes retained earning. The next term is revenue. What is revenue? So, revenue is basically the sales outcome. Revenue is that how much did I earn as a sales. So, revenue is also known by another name as sales revenue. So, it is the outcome or is the receipt of recurring nature which a business received by selling products or by selling services. If it is a service company, that by selling services. Let us say for example, nowadays there are so many service companies available or working around in the economy. We have people coming and doing the plumbing job, we have people coming and doing the parlor job, beauty job in at somebody's doorstep. We have food delivery service, we have so many taxation, return file service, we have so many services. So, and it is also from the product, sale of product. So, companies selling furnitures, TV, daily utilities, or selling any cosmetics, any product you name it. So, revenue is basically the receipt from the sale of product or the service a company deals in or company regularly deals in. Now, what are expenses? So, expenses are the amount which are spent to earn those revenue. So, the revenue is the receipt you are getting. Here expenses are payments. So, the payments of recurring nature which are made to anybody for the purpose of or which help us generating the revenue. So, revenue and expense are related to each other, right. So, expenses are the payments, revenues are the receipts, and both are of recurring nature. They both are considered for 12 months, for 1 year. So, that is what expense mean. There is another term, expenditure. Expenditure is a broader term. It includes both payments for recurring nature as well as the payments for long term assets. So which means the capex and the opex both are expenditure. If we take them together is an expenditure, and expenses are only opex, operating expense, or opex means to run the business or to generate the revenue. The next term is debtors. Now, what are debtors? The debtors are the people who actually have bought something from us on credit, but they did not pay us. So, debtors are assets. So, we call them as current assets, means we expect that they will pay us back within 12 months. So, debtors are assets and they are the outcome of credit sales to people. It's a very trendy that majority of the businesses are run on credit. There are very few businesses which are on cash or on the payment basis. Majority of the business, especially B2B transactions, generally are on credit, and debtors are the people who bought some service or bought some product and promised us to pay in future. So, they become our assets because we expect to receive from them. Opposite to debtors is about creditors. So, the creditors are the people whom we as a business owe, right. The business owes to them. It means the creditors are the people or the company or the organization which has rendered some service to the business or which has sold something to the business, but business has yet to pay against that or for that service or for that product. So, those people become the obligations to be for the business. So, we call them as creditors. Basically they are liabilities. So, debtors are assets, opposite to that is liabilities. So, creditors are current liabilities which are the outcome of taking some product or some service on credit from anybody. So, that is what the creditors are. Then the term top line and the bottom line, these are the last two terms I want to discuss. Top line is basically a term which is used in business very commonly. It's nothing but the sales revenue, right. So, top line talks about the sales revenue and the bottom lines talk about the profit. So, what is profit? The profit is the difference between revenue, the receipts of recurring nature, less the expenses. So, difference of revenue from expense is my profit, which we call in business it is called as in corporate world it is called as bottom line, and the top line is the total amount of sales, right. These are the terms which we use in accounting very frequently, and I wanted to introduce these terms at the beginning itself, so that whenever I am using these terms in my future lectures, nobody gets surprised and they are well aware of. So, these were the terms to be remembered, and otherwise they are important terms. Wherever you go and work, these terms are important to be known to you. So, with this I would like to wind up, friends. Thank you very much. Thank you.